Welcome to today's webinar. Today we are focusing specifically on the Carrara project. My name is Emily Macfarlane and I'm the Marketing and Partnerships Lead here at VentureCrowd, and I'll also be the host for today's session. Thank you so much for joining us. So as I mentioned, we're here to provide you with the latest update on the Carrara project, including progress on the ground, key milestones that have been achieved, and an overview of the new secured mezzanine facility that is now available through the VentureCrowd Trust. So how today's session is going to run, David, who you can see on the screen, will include a bit of an overview of the project presented via Zoom, and then obviously we'll go to a Q&A session. So if you do have any questions during the presentation, if you see down the bottom of your Zoom screen, there's a little Q&A bubble, so please feel free to pop them in there. We're also recording today's session, so if you do need to jump off early, or if you'd like to send this to somebody who might be interested in the project, a recording will be sent around. So we're super excited to share why this project, located in one of Southeast Queensland's strongest performing property corridors, continues to gain momentum, and how the new facility will offer an opportunity for investors who are seeking a structured asset-backed return. So I'd also like to take this opportunity for those of you who aren't familiar with our head of property, David Whitting. So David is a senior development executive with almost 30 years in the industry, including being a director of the developments for Multiplex, project director for Lang O'Rourke, and state development director for Grocon. He's also been responsible for the delivery of over $3 billion worth of developments for companies that he has worked for, and has operated in the areas of commercial, retail, alternative assets, and residential. David oversees the property business for VentureCrowd. So much talking from me. I'm going to hand it over to you, David, to give us a bit of an overview of the project before we start the Q&A.
Thanks, Emily, and thank you to everybody for joining us. Firstly, a short project status overview from me before we get to the purpose of today's webinar, which is to answer particular questions you might have in relation to the secured facility that is currently on offer. Hopefully what I say will be able to answer some of those questions on the way through anyway. Since our last update to current investors, the team's worked diligently to advance the project. Despite atrocious weather conditions, which you'll know if you live in Southeast Queensland, the civils will be complete this month, and the first of the screw piles for the houses will be drilled to hit rock. That means there's fantastic activity on site, and we actually do welcome any investors to go down to site and give us a call. The roads are in, and the curbs and channeling done, all those underground things that you never really see, like the sewers, are in. From there, the slabs and the frames of the stage 1 grand villas will commence. As you recall, the site is a very significant, almost 30 hectares, with about 4 hectares of developable land reserved for parklands and public open space, which will be dedicated to council on completion of the project. The works required to vegetate and beautify those areas will commence in parallel with the commencement of construction, so that they are at a sufficient state to allow for council plan sealing and titling when required for those settlements. Given the rain delays, we slowed the project spend and extended the soft launch of the first of the grand villas. In March, we announced the new branding and the formal launch of Cumulus at Carrara. We're pleased to say we have 2 unconditional contracts with a number of other parties in the wings, awaiting the formal announcement of our builder, and I'll have some really big news on that next week, hopefully. The full launch is awaiting full marketing renders, which I can tell you from the wireframes are truly spectacular. The renders for the rec centre are emerging with the pool, the barbecue, and a bar overlooking the plains. The bar actually reminds me a bit of a South African safari lodge, elevated and overlooking the bush vegetation, just without the elephants and the giraffes. It'll be an incredible facility for those villa owners. The grand villas themselves are quite a different offering to the usual townhome designs, which usually exists in rows or circles overlooking the neighbours. The stage 1 dwellings are currently scheduled for completion in September 2026, at which point the facility repayments will begin through to December. Gross revenues for the project are forecast at just over $105 million, and that is through an independent assessment through property researcher Paul Broad. That means the average is about 1.78 million per villa. 53 of those are 4-bedders and only 6 are 3-bedders. We think that's pretty conservative, and we anticipate being able to push pricing as the sales campaign gets moving. The project is supported with a first mortgage construction facility from lenders JVL. That is John Van Lieshout for any Southeast Queenslanders, the former owner of Super Amart, who runs a debt book, particularly in this market. They're very experienced in this market and in particular lending to apartment and townhome developments. The facility agreement we have with them is not fully repay them from stage 1 sales, but to bring their LVR down to an agreed level, enabling us to roll directly into the next stage of development. It's the liquidity generated by sales and the fact we don't have to pay them down fully that we'll lean on for liquidity to pay the more expensive second mortgage down as fast as we can. Successful sales and increased pricing will allow us to increase our first mortgage facility, meaning there is a potential for a reduced call for the second mortgage. This means we may not require the latter part of this facility, meaning that if you've got an interest in the facility, you should get in early. The facility, as you recall, is for an 18-month period and an interest rate of 20%. That's a very short overview of the project and the facility itself. The most important thing, of course, is that we understand and get and answer your questions. So I'll hand over to Emily for a wrap, and she can handle the question asking, and I'll do what I can to answer them.
Thank you so much, David. That was really thorough explanation of the project as a whole. So you mentioned that the civils are wrapping up this month. Are we still on track for this stage 1 villa completion timeline?
We certainly are, yes. So as I said, we expect completion in September next year, and we'll be settling them all, hopefully through to December, before rolling on to the subsequent stages.
Brilliant. Well, could you expand a little bit on what sets the Grand Villas apart from typical townhome developments in this area?
Yeah, sure. Obviously, with the type of site that we've got, which is on an elevated peninsula and overlooking the plains of Carrara, we have quite a different offering to anything else that's in the market. As most buyers will know from looking around the Gold Coast, townhomes are generally done on infill sites. They're done in concentric circles, looking in at each other with small roads in between, and effectively no vistas or views. Each of the Grand Villas runs down either side of the road on the ridge, and so all of those villas have superb views either over the skyline of Broadbeach or to the mountains that sit just behind the Gold Coast. So it's really, really quite a different offering.
Brilliant. And what kind of interest have we had from buyers so far? Have we seen any investor demand, or is it largely owner-occupiers?
At the moment, it's probably erring a little bit more on the owner-occupier side. These townhomes are generally probably a little bit expensive for investors. One of our 2 contracts is an investor, mind you. But we do expect predominantly owner-occupier interest in the product, mostly from the local catchment, but definitely capturing that great demographic move up towards warmer climates from the Gold Coast, from Sydney, I should say, from Melbourne and other places down south. You know, the Gold Coast is the great beneficiary of that aging demographic move.
Brilliant. So for those who are new to this type of investment, could you briefly explain how the secured mezzanine facility works?
Yeah, sure. The mezzanine facility is a second mortgage, so it will sit behind JVL's first mortgage, and is therefore second in order of repayment. You know, there is sufficient margin sitting behind that, including our current equity in the project of over $10 million, which is obviously the first call if anything happens. But I think, given the strength of the market, the price point of this project, which is effectively a four-bedroom house for 1.78 million, brand new, we're supremely confident that in terms of the security and the positioning of this product, as others in the project. Naturally, because it sits in second position, it attracts a slightly higher interest rate, or quite a higher interest rate than the first mortgage facility. Yeah, so that's it. That's it in summary.
Brilliant. So what is the LVR of the second mortgage?
The LVR in the second mortgage, I will have to go to my sheet here, is to be accurate, is 57.7% of the peak debt LVR on the gross revenue, and 62.8 on the second.
Thank you. So I know you've spoken about what the investor return profile is that's being targeted. How does it compare to other structured property debt offers on the market right now?
Yeah, well, obviously we have canvassed the market, looking at similar products, and there are a few around, and they certainly, some of them are lower than this, in the 17 to 18% range. We have pitched it just a little bit above that because we're pretty keen to particularly secure the first part of this, so we think if investors do the same and look around, they'll find that the product is very competitively priced.
Brilliant. So what are some of the risk mitigants that are in place, particularly in relation to repayment of the facility and the overall product de-risking?
Yeah, sure. Obviously, um, the product is predicated on the back of quite a deal of work that we've done. We've obviously secured the site, so we own it. We've got a favourable first mortgage position on it. We have gone to a third party to assess our revenues, upon which these are based. We constantly monitor the market in terms of our competitor pricing, and what the product is offering on a like-for-like basis with our competitors. We look at the market as a whole, of course, in terms of the buyer profiles and what is happening with those kinds of demographics that I talked about. So we have a great deal of confidence in the product. We've got a builder now, which I'm going to make an announcement on next week, that we're just doing final documentation on. So we have the pricing, locked in for that. We hopefully will be the beneficiary of future interest rate reduction. And whilst owner-occupiers are probably not quite as affected by those interest rate reductions, nevertheless, it certainly helps market sentiment, and it certainly helps pricing. And the more obviously that we can push pricing throughout the development, the more those early purchasers of the product benefit in terms of the equity they've gained in the properties that they've secured.
Yeah, right. So actually, on the topic of interest rates, have you seen any impact, either positive or negative, from recent interest rate sentiment or lending conditions in the region?
Look, absolutely. We've got a number of other projects that are probably in the more advanced stages than Carrara. So particularly our project at Albany Creek in Brisbane, and our project at Glenvale, just on the outskirts of Toowoomba. We have seen upticks on both of those projects. Albany Creek is in stage 2 of selling, and Glenvale is about getting close to halfway through as well. It's 312 lots, and there's no question that interest rates, positively affect decision making by buyers. What we've also seen in the first home buyer market too, with the new budget yesterday in Queensland, and also other sweeteners from the federal government, is that it just gives a lot more confidence to the buyers and the buying market.
Good to know. So I know we've talked about the strong fundamentals in the Southeast Southeast Queensland market. How does Carrara in particular stack up when it comes to price growth, demand, and supply constraints?
Yeah, sure. Well, we're the only project that we know of in Carrara or close by. We Carrara is one of those slightly sleeper suburbs that isn't in the main part of the Gold Coast, but yet very close to it. It's a slightly different market in that along the coastal fringe, obviously apartments dominate. Carrara and suburbs like it are the beneficiaries of the fact that you just can't get large apartment towers going at the moment. You're generally unable to secure the pre-sales for them. A lot of the big builders, like Hutchinson's, have pretty well left the market because of the risk of construction, during periods where there have been very high rates of escalation. And they've lost money on it. So we're supremely confident. We've got obviously only 59 things, as opposed to 300 or more sometimes that you might have to deal with in just one apartment of many, or one apartment block of many on the coastal fringe. Land is extremely scarce on the Gold Coast. Just as an example with this project, it was the kind of the last stage on the very end of the peninsula. There won't be any more of them. We can't extend the peninsula out. The plains around us are all protected, and there won't be anything delivered within cooey of us ever.
So, looking ahead, what will the key milestones be over the next 6 to 12 months that investors should be watching?
Look, obviously progress of the build. There are certainly wet weather delays that have been accounted for in terms of the construction program to hit those completion dates that I talked about in September next year. Over the last year or two, we've had probably more than our fair share of rain. We've increased those delay occurrences to account for that, but that one is in the lap of the gods. What we are finding in the Southeast Queensland market is there is a slight increase now in the availability of builders. There is much more stability in the pricing of the things that go into construction, whether it's steel, timber, etc. So we think we've got a much better handle on those things now than we were able to get, say, 6 months ago. The construction pricing is pretty well scoped down to the almost the last finish and the last the last item. So we have a deal of confidence that on timing, on quality, and on cost.
Absolutely. So you also mentioned earlier the potential to expand the first mortgage facility. What might that look like in practical terms, and how would that impact the second mortgage raise?
Yeah, sure. Well, obviously, the LVR is predicated on a certain number now. We believe that once we get going on sales, as happens during most campaigns, and in fact is happening on all of our other campaigns, such as Albany Creek and Glenvale, that we'll be able to push pricing. It's a floating LVR, which means that the more revenue that we can gain, the higher the first mortgage goes, which means the less we need in the second mortgage. So at the moment, as I said, we're predicating the facility on 9 million, which is the gap that's currently the case. If we get those revenues up, we'll be able to bring that second mortgage number back down. So that's it in essence.
Great to know. So it looks like we've gone through most of our questions, or some people might be a little bit nervous to ask in such a public forum, which is absolutely fair enough. So if you do have any questions that we didn't get to answer for you today, you're always welcome to reach out to our team at investor@venturecrowd.com.au, and we'll endeavour to get back to you as soon as possible with any of your questions. I've also popped in the chat box a phone number. So if you do prefer to reach out via phone, you can give us a call as well. If you haven't expressed interest in the project so far, I've also put the link to the expression of interest page in the chat box. So feel free to go to the page. There's a lot more information there, so you can read all about it. You can register your interest, and by doing so, you will be kept up to date with the project and the raise when it does go live so that you can invest. But I want to thank everybody so much for their time today, and particular yourself, David, for giving us so much information. It's been super thorough and it's a really exciting project to watch. I will also just remind everybody that we'll send around a recording of this webinar as well. So if you did miss anything and you want to rewatch it, you're welcome to. And if you want to send it on to anybody else that you think is interested, you are most welcome to as well. So thank you so much, everybody, for being with us today. And thank you so much, David, for your time. We really appreciate it.
Thanks, Emily. And just on a personal note, I would like to double down on that invitation. Should any investors or potential purchasers, if there are any here, wish to visit the site, we do have a sales manager who is available, and I'm very happy personally to drive down and meet interested investors and purchasers as well. So I'd just like to extend that invitation personally to everybody on the channel here.
Brilliant. Thank you so much, David, and thank you everybody for attending. Hopefully we'll chat to you all soon.
Thank you.